Hello there. Welcome back to Grade 10 Accounting. In this video, we want to look at the preparation of the income statement. And we've got a past exam paper that we have here that we want to look at. So we've got a question that we have here that we want to look at. This question is question 3 on that question paper. And the question reads, the information below was taken from the books of Samantha Distributors. Their financial year ends on 28 February 2017. On the required part, prepare the income statement of Samantha Distributors for the year ended 20 February 2017. So we're just going to look at the first part, which is 3.1, and this question is got 65 marks. So if you go to our question, you'd see that we have got information that we are given there that we want to go through before we start to answer the question. So this is the information. So we've got Samantha Distributors pre-adjustment trial balance is at 20 February 2017. We are given debit column, credit column, and then are given the balance sheet account section. So these are the balances that we are given that are going down, and then we also have the nominal account section that we have there. So given this is for information, you would see that also we are given additional information there on the next page. So this is the additional information that we have here, ranging from additional information number 1 going down. So you need to go through this information before you start to answer the question. So after that, again, we also have additional information stretching to additional information number 12. So you see that the last additional information is on employee gross salary, summary, and then we've got deductions, and then at the end of the question, we are given a note here, which is the employer does not contribute towards any fund. So we have to take note of that. So given this now, we can now go to our answer section and try to see the presentation that we are given in our answer book. So according to the question, this is the presentation in terms of the accounts, the answer section. So we are going to start with our sales. So we are just going to go there and try to see what figures do we have in terms of sales. So I'll go to the question again. We go to the question and try to see what we have in terms of sales, and then as our sales are here, we see that the figure for sales is here, which is 875,000. So obviously, we need to find out if we've got any data allowances or any sales returns that are mentioned in the question. So we'll see that we've got sales returns that we have here, our data allowances, which is 12,600. So obviously, we are going to say our sales, we subtract the data allowances so that we get the net figure. But before we enter them, on the other section, you need to go to additional information to find if you have got any other information that is affecting our sales figure. So if you come here, you would see that on the first information, you are told that a credit note was issued to M. Shaba, a data for 1,500. As this was for merchandise returned, the cost price of the goods returned was 1,200. No entry was made. So what does it mean? It means we have to subtract again 1,500 for the figure for sales, because it means these returns were not taken into account. And also on the cost of sales, also you have to adjust this 1,200, because these goods that are returned are also going to reduce the figure for cost of sales. So we are going to subtract also 1,200 from the figure for cost of sales. So we are subtracting 1,500 from sales, and then we subtract 1,200 from the figure for cost of sales. So basically, that's what we are going to do. Then we can just check at the figures that we have for those two, that is sales and cost of sales. So if you come here, you would see that for sales, we are going to say 875,000. We subtract 12,600 for data allowance. Then we subtract the 1,500 for the data allowances that were not taken into account. Then you get your net figure. So let's go to our answer section and just do a search. So you come here. So here we are saying in brackets, we are going to say our 875,000. We are subtracting our 12,600. And then we are subtracting your 1,500. Right. We do that. We are going to get a figure for 860,900. So this is what we have. And then obviously we have now a cost of sales that we need to see how we can adjust those ones. Remember, we have to reduce with the 1,200 that we have for cost of sales. So we are saying cost of sales figure is what is 500,000 here. But if you go to additional information, we have the cost of sales which was omitted, the adjustment that was omitted of goods that were retained of 1,200. So we're saying this 1,200, we subtract it from the cost of sales. It reduces again cost of sales since the goods were retained. So they are not part of our cost of sales. So we are saying 500,000 minus 1,200. So go to answer section. So we are saying 500,000 minus 1,200. I will calculate it as such. We are going to get 498,800. Then obviously we subtract. So when you say 860,900 minus 498,800, you get your gross profit of 362,100. So from there, we go to operating income section. So we're just going to see discount received is pre-entered 9,280. Then we check our rent income. So for our rent income, we also have to go to additional information to check the figure that we have for rent income. So rent income is here. We have got 37,570. But before we enter that figure, we need to go to additional information to check if we have got any adjustments about rent income. So if you come here, we see that we have got an adjustment that is there on item 8. Rent has been received up to end of March 2017. March 2017, and we check where the year is ending. Our year is ending on 28th February 2017, and this one is received March 2017, which means on 28th February 2017, that's where we are going to have about 12 months. And then we're going to add another extra month for March. So it means this rent was received for 13 months. So what are we going to do? We divide by 13 the total that we are given in the trial balance, and then we get the monthly rent. And then we can now know that that monthly rent is going to be the month the rent that was received in March, which is outside our period. Our period is ending on 20th February 2017. So here we are saying rent income, the figure that we have is 37,570, and then we are dividing by 13. So we can just try to do that. We say 37,570, and then we divide by 13. You are going to get your 2,890. So here you are going to get your 2,890. So the 2,890 is now also for March. So we are supposed to subtract it from the figure that we have for rent income, which is this one, so that we get the rent income. We are left with the rent income for only 12 months. So remember, the 2,890 was received, and it is an advance receipt of rent income since our year is ending on 20th February 2017. So according to the matching concept, we only record what belongs to this year. What belongs to the following period we should be subtracted as a prepayment or in advance receipt. So we subtract 2,890 from that figure, then we get the net for that period. So here we are saying we go to the answer section. So for rent income, we are now saying in brackets, we calculate it as 37,570. And then we subtract 2,890. And then the figure that we are going to get is 34,680. And then obviously we check now if you have got any other income that we have in the question. Remember, we also check for provision. Before you go to expenses section, you must also check for provision for bad debts Provision for bad debts adjustment. I remember the provision for bad debts adjustment can be income, can be expense, depending on the movement. If it's an increase, it's an expense. We put it under expenses section. But if it's a decrease, it's going to be an income. So it's something that you have to check before you go to expense section, because if it's an income, you have to include it under income. Then also provision for you can also check for trading stock deficit or surplus. Check for trading stock surplus. Trading stock surplus will assist you to know whether if there's a surplus, you have to include it under income. If it's a deficit now, that's when you include it under expense. So those are the some of the things that you have to check before you go any further. Then if there's any disposal of non-current asset again, you have to check for profit on disposal. If there's a profit on disposal, you put it under other income. If it's a loss on disposal, that's when you put it under expenses. So those things are, you have to check them before you go any further. So if you go to our question section, we are trying to find out if there's any other income that we are seeing there. But if you go through, you will see that we don't have any other income that we are seeing there. So if we don't have any, you need to go to additional information to try to see again if we have got any other income that you are seeing there, item by item again. That's now the importance of you to go through the additional information before you start to answer the question. You can be able to recall and then identify where needs to be adjusted. So if you go through, if you come to additional information number number 9. Let's come to 9. A debtor S vouch deposited 850 runs into the business bank account. The debtor's account was previously written off as recovery. So these are bad debts recovered. These are bad debts recovered, and the bad debts recovered are part of income. So we're going to put the 850 as our income. So here we are saying on the under section, we have bad debts. Bad debts recovered, and we've got 850. So it means we have exhausted everything. But obviously, we also have to check the trading stock surplus or deficit. So let's just quickly check it so that we know if it's actually an expense, because there's no space for putting in other adjustments. We don't have any other income that is supposed to come there, but we can as well try to check it before, and then we can just enter it when we arrive at expenses. Right, trading stock, we have got 16,300. This is what we have there. And then that 16,300, we try to check in terms of other adjustments there so that we can see, because we are supposed to compare book value and physical stock count value. Book value and physical stock count value. So what we are saying is if book value is greater than physical stock count figure, we are going to have a deficit. And it's an expense. We put it under expenses. But if book value is less than physical stock count figure or value, we are saying it's a surplus, and it is to go under other income. So this is what we want to check. So you got 6,300, and you go to additional information to see other adjustments that are affecting inventory. We have got a credit note of these goods that were retained. So we are saying the figure that we are given in the trial balance for stock is 16,300. Then we have got goods that were retained with cost price of 1,200. So it means 1,200 is going to be to add to increase our figure for closing stock or our book value. And then we check any other adjustment that we have. We also have donations for goods to an old age home was not recorded. So these goods went out. So they reduced. They were the cost price of 3,000. They reduced our stock, so it's minus 3,000. So after calculating like this, you're going to get your book value. So this is your book value. So if you calculate it there, you're saying 16,300. You say plus 1,200, and then you subtract 3,000. You're going to get 14,500. So here we have got 14,500 being your book value. Then physical stock count figure is the one that you are given here is 12,000. So what does it mean? It means our book value is greater than our physical stock count. And if you have such a scenario, it means it's a deficit, so it's an expense. So it's an expense of what 4,500, 14,500 minus 12,000, and then you get your expense of 2,500. So we're just going to put it under less expenses. So before we do that, let's just adjust for the figures that we have there. So here we are saying we have finished in terms of the section of other income, operating income. So we are saying 850 plus 34,780 plus 9,280. The figure that you're going to get there is 44,810. So here we've got 44,810. And this figure are going to add it to our gross profit. So we're going to say gross profit plus operating income. And then we are going to get your gross operating income. So if you add the two, the total that you're supposed to get here, 406,910. 406,910. This is what we have. And then operating expenses, we are going to leave it blank here, and then list all the operating expenses as they follow. And then after that, then we can add to get the total of operating expenses. Discount allowed. Discount allowed, we go to the information that we are given in the question and try to identify discount allowed. So if you come here, you'd see that discount allowed is 800. That's our discount allowed. But we are supposed to go to additional information to check any discount allowed that we have. If you go to information number, let's try to see if we have got any. You go information by information and try to identify if we have got anything that is affecting your discount allowed. Let's try to see as we go down. Right, let's go to item 10. A dishonored check on this point, a dishonored check from B Lobby, a data for the 1,200. This check was in settlement of his account of 1,208. What does it mean? This is a data who paid 1,200, but the data was owing 1,208. So what does it mean? It means we allowed the data, we gave the data a discount. So this is discount allowed of what? Of 1,280 minus 1,200, which is 80. So the discount allowed was 80, but this check was dishonored, which means this amount 1,280 is going to come back to the what? To the debtor's account. We reinstate it because the check was not processed. So it means it's going to reduce the figure for discount allowed. That's what it means. So we are going to say the figure that we are given for discount allowed there, we subtract 80. If we come here, it's 800. So we are going to say 800 minus 80 for discount allowed. And obviously, we are going to get your 720 there. So let's go there. So we are saying 700. We are saying 800. As the adjustments, we are saying discount allowed, we are saying 800 minus 80. And that's when you are going to get your 720. Then we go to the next, salaries and wages. We go again to our question and try to see what we have in terms of salaries and wages. We are here. Salaries and wages are 96,750 is our salaries and wages. We go to additional information to check any adjustment to do with salaries and wages from the beginning. We go down, checking any other adjustment that we can see. We go to the next page that is affecting our salaries and wages. We come to additional information number 12. It's talking about one employee has been omitted from the salaries journals of February 2017. The details are as follows. So these are the details. We've got gross salary, we've got deductions, but basically the figure that is supposed to go to the income statement under less expenses is the gross salary, which is this one. So we are just going to check 10,000. Since they are saying this was omitted, we need to add to the figure of salaries that we are given. So we can just go and cross-check there the figure of salaries, then we add our 10,000. So the figure for salaries and wages we are given it the year is 96,750. Then we add our 10,000. So we go to our additional information, and then now on our other section, we are now saying in brackets salaries and wages 96,750. We add our 10,000. What do we get? We get 106. Salaries and wages 106,750. This is what we have. And then next one is bad debts. Bad debts, obviously, we now need to go to bad debts. We now need to go to our question and try to see what figure for bad debts do we have. We have it here, which is 5,200. And then we go to additional information to find out any other adjustment that is affecting our bad debts. But if you go to item 4, you are going to see that it reads the data. C-Class was declared insolvent. His estate offered to pay a dividend of 40 cents for every rand owed. His original debt was 1,200, and the balance must be written. Off. No entries were made in the book. So we have got bad debts that was not captured here. But this person paid 40 cents for every rand. So this is just 40%. 0.4 is a decimal was paid of 1,200. So it means the remainder is going to be written off. It's going to be our bad debts. So what I'm going to say, we are going to say 0.6. Was if 40 cents was paid, it means the one that was not paid is 100 cents minus 40 cents, which is 60 cents. And the 60 cents is a decimal becomes 0.6. And then we multiply by 1,200. And we try to calculate it as such. We're going to get your 720. So here we get your 720. So this is the bad debt figure that we are going to add to the figure that we are given in the trial balance. So in the trial balance for bad debts, we are given it is 5,200. Then we add your 720. So we can just go and do that on your answer section. So we are saying bad debts 5,200, and then you add your 720. And then the amount that you're going to get is 5,920. Then we go to bank charges. We go again to our question to check the figure for bank charges. We are having it here, 1,210. We go again to additional information to find out anything to do with bank charges. Go to additional information number 10. We have got our service fees, it's a bank charge. We've got our cash deposit fees, bank charge. So we are going to have 40 plus 200, and we get your 240. So our 240 is also supposed to be added there. Remember, the statement is saying the bank statement received from the bank on 20th February reflected the following. Obviously, these were not captured in the books. So we now go and add our 240 to the figure for bank charges that we are given there. So let's just recheck the figure for bank charges, 1,210, and then we are going to add your 240. So you go to the other section. We are saying bank charges 1,210, and then we are going to add your 240, and then we add the 2 1,400, 1,400. For big charges, we get 1,450. And then we go to insurance. Insurance figure, we have got 9,800. And then we check any additional information affecting insurance. Let's try to see. You see it at item 5. Insurance includes an amount of 1,800, and this is an annual payment for the period 1 August 2016 to 31 July 2017. So there is a prepayment there. Remember, our year is ending on 20th February 2017. So let's count the number of months that are outside our period. So if it's our year is ending on the end of February, so we are saying March, April, May, June, July, then 1 August, that's where it's ending. So we have got 1, 2, 3, 4, 5 months that are outstanding. So what are we saying? To find the months out, the amount outstanding now, we use the proportion of months, whereby we're saying 5 over 12, and then we multiply by 1,800. You can try to calculate it as such, 5 over 5 divided by 12, and then we multiply by 1,800. So for insurance, you are going to get your 750. For 750. So this one is out of the period. So in other words, it's a prepayment, or it's an amount that was paid in advance. So we need to remove it because it does not belong to this period. So we go there and remove it from the figure 4. Insurance. Insurance with 9,800, and we remove 750. So we go to our answer section. So on our answer section in brackets, for insurance, we are saying 9,800 minus 750. We do that, we get 9,050. Then next, we have our telephone. Then for telephone, we have 12,560. 12,560. We go to additional information to find anything to do with telephone. Right, we check item by item and try to identify if you have got any adjustment that is explaining about telephone. Remember, we also have something at 11. Let's look at 11. The telephone account for February 2017 was received, but will only be paid in March 2017, which is 1,000. So it was received, the account was received, but we did not pay anything. So it's an owing. And we know that in accrual or owing, we add according to the matching principle or accruals principle. So we add there the 1,000 to the figure that we have for telephone. And the figure that we have for telephone is 12,560. Then we add our 1,000. Then we just go there and try to adjust as such. So for telephone, we are saying 12,560. Then we add your 1,000. And then the figure that you are going to get is 13,560. So this is what we have. And then there are some expenses that are not listed there that we need to pick. So we go to the trial balance and go item by item again under the nominal account section and try to identify other expenses that we did not tick there. We have stationery. So stationery, the stationery that is an expense is the stationery that was used. Here we are given 10,800 is stationery that was bought. So to find the stationery that was used, you say what was bought minus what remained at the end of the period. So what remained at the end of the period, we find it there in additional information for stationery is 800. So we are saying what we have there minus 800 to get what was used. So 10,800 minus 800, then we get 10,000. 10,000 is the expense. So we go there. We say stationary. $10,800 minus 10,000. And then the figure that we get is what? Sorry, 10,800 minus 8,000, sorry. Minus 8,000. Minus 800, sorry, minus 800 here. Remember, it's 800. And then we are left with 10,000 as an expense. Then we go to the next expense to see what we have. We go to the next expense to see what we have. Right, remember we have adjusted stationary, so we go to the next, which is sundry expenses, 5,400. Then for sundry expenses, again, you go to additional information to check if you've got anything that is affecting sundry expenses. You go item by item, checking if you've got anything mentioning about sundry expenses. Remember, we've got something again on the next page. We can just go and cross-check. Here on number 12 is the last additional information. You see there's nothing. So if there's nothing, you take the figure that you are given in the trial balance as it is, and you see that the figure that we have in trial balance is 5,400. So we are taking it as it is, 5,400. So we are saying sundry expenses. $5,400. Then obviously we also look for any other expense that we have in the trial balance. Right, sundry expenses, we've listed it. We go to the next one, which is water and electricity. Water and electricity, we check again additional information. Do we have anything that is affected water and electricity? We go down. We go down. We are seeing that we are not seeing anything that is affecting our water and electricity. So if it's like that, we check the figure that you are given in the trial balance as it is. And we are seeing that the figure that we have is 14,200. So we are just going to enter our 14,200 as it is. Let's just try to see. Then that figure is 14,200. So we are saying water and electricity. And we are saying the figure that we have is 14,200. Then after water and electricity again, we need to check which one we have next. You see, we have got interest on loan. But interest on loan, we are going to adjust it after operating profit. So we can leave it for now. Then we also go to additional information to find other expenses that we did not capture from the question. So we go to additional information now, additional information by additional information to see if you've got any expenses that are only mentioned in additional information that are not there in the trial balance. We go item by item again. We've got number 2, donation of goods to an old age home was not recorded. Cost price is 3,000. So this is going to be the expense. It's a donation. So a donation, we regard it as an expense. We've got 3,000. So we are saying donation. And we have 3,000. Then after that, we also want to check there. Remember, we have the issue of trade stock deficit, and we did discuss about it earlier, and we calculated it. We can just refer back so that we can be able to understand. Remember, we said this was the calculation for for trading stock deficit that we are having there. We have 14,500 is the calculation of the book value. Which when we said 16,300 is the figure that we are given in the trial balance, then we added 1,200 of this the returns that were not captured, and then we subtracted 3,000 for the donations. Then we got 14,500 to represent the book value. And then we compared it with the physical stock count, which is 12,000, and we found out that the book value is greater than the physical stock count. So it's a deficit. So the deficit amount, we said now the book value minus the physical stock count, whereby we're saying 14,500 is the book value minus the physical stock count figure that we are given in the additional information of 12,000, and then we go to our 2,500. So we are just going to summarize the working and put it there as trading stock deficit. Trading stock deficit. So we are here, we are now saying trading stock deficits in the amount that we have. We found it by saying 16,300. We subtracted 1,200. We subtracted 1,200, or we just say we subtract our. So to make it short, I'll just subtract the total figure, which is 14,000. Let's just try to see. Let's just okay, we can just put it in full. There's no problem. We can put it in full by saying 600,000 minus 1,200. This is the figure that we calculated there. So here, what we are saying is we are saying 14,500, and then we subtract your 12,000, so that we get the figure that we want to get for trading stock deficit. So this is our trading stock deficit, which is 2,500 that we calculated on top there. Then the last item that we have, we can just go there and recheck. Obviously, we are left with the donation. Remember, we have got the donation figure that we regarded as expense. Donation. We did include that one. And then now we are left with the depreciation. Depreciation for the year amounted to 3,400. So we are going to include our depreciation is 3,400. So we are saying depreciation and we've got 3,400. So this is the last expense that we have. Then we can add all expenses in the column from the top to the bottom, and the total that you are supposed to get there, it's 175,950. And obviously we subtract it from the figure for gross operating income. So we are saying 406,910 minus 175,950. Then you get your operating profit. So if you come here now, operating profit now is going to be 230,960. And then beneath that, we are going to have your interest income. Remember, we've got interest on fixed deposit. So we go there and try to see what is it saying about interest on income. Right, we come here, let's try to see. We have got item 7, which is saying provide for interest on fixed deposit, the interest is not capitalized. So for interest income, we come here. In the question, let's try to see if we are given interest on fixed deposit. We are seeing interest on loan. And if you go to your fixed asset section, we have got our 10% per annum as fixed deposit. So the 10% of 20,000 is the interest income, which is 10% times 2,000. You are going to get 20,000. You are going to get your 2,000. Then of course, in the additional information again, we want to see if we got anything that is mentioned about interest on fixed deposit. Let's try to see. We also have interest on current account, which was not reflected. So this one also is going to increase interest income, 150 plus the interest on fixed deposit that we have there. So we are saying interest on fixed deposit. Interest on fixed deposit, we are saying 10%, which is 10 over 100. This one, our 10%, and then we multiply by 20,000 over 1, and then you are going to get your 2,000. And then we add the 150 of interest on current account that we have in the additional information that was omitted. So it's going to say 2,000 plus 150. And then we get 2,150. So we are just going to summarize that one as our interest income, 2,000 plus 150. Right, so interest income, we are saying 2,000 plus 150, and we get 2,150. So this is what we have. And then profit before interest expense. Now, if you add the two, the total that you're supposed to get there is 233,000. 233,110. And interest expense, it's already calculated 13,500. So you're going to say 230,110 minus 13,500, and you are going to get 219,610. And our question is got 65 marks, very important. Right, this is what we have, guys, according to this video on the calculation of net profits in our income statement for the year ended 28 February 2017. Let's stay tuned for more videos to come. Let's stay notified. Let's subscribe and turn off the notification button. Let's share the video to those who are interested with the video. We'll meet again in the next video. As for this video, I'm signing out.